Welcome back to Truality.Finance, where we conversate over any and all things money. I hope you're having a beautiful day. You know what's even more beautiful than a beautiful day? Finding unreal trading setups like this that you can see right here. Yep, we got another 100x altcoin. Do you want to know which altcoin it is and how we find these? Okay, then watch the video. Ready to stop watching your money sit and start making it work for you? Let's turn your cash into a growth machine that never sleeps. Are you in? Here are 5 essential investment tips to help you build wealth and secure your future. Are you ready? Let's dive in. Welcome to the Truality.Finance channel, the #1 spot for crypto education and algorithmic trading. If you like the video, hit the like button, subscribe, and turn on notifications. We drop new videos every single day to help you become a better investor and trader. Tip number 1, start early. The sooner you begin investing, the more time your money has to grow through the power of compound interest. Even small amounts can add up significantly over time. For example, let's say you invest $1,000 at age 20. Assuming an average annual return of 8%, your $1,000 becomes $1,080, then $1,166. Tip number 2, diversify your portfolio. Don't put all your eggs in one basket. By spreading your investments across different asset types, you can balance potential losses and gains, reducing your overall risk. For example, let's say you have $10,000 to invest. Instead of investing all of it in one cryptocurrency, you can allocate $3,000 to Bitcoin, $3,000 to Ethereum, $2,000 to a low-cap altcoin, $1,000 to a mid-cap altcoin, $500 to a meme coin for fun, $500 to an NFT project, and $500 to a blue-chip NFT. This way, if one investment doesn't perform as expected, it won't have a major impact on your overall portfolio. Diversification is a powerful risk management tool that can help you stay in the game for the long haul. Tip number 3, invest regularly. Consistency is key. Making regular contributions, even if they're small, can lead to substantial growth in the long run. For example, let's say you invest $100 a month in a diversified portfolio of ETFs or mutual funds that track major market indexes. After 30 years, with an average annual return of 8%, you could have a portfolio worth over $1 million. It's incredible what compound interest can do when you invest consistently over time. Dollar cost averaging, or DCA, is a great strategy for beginners. DCA is an investment strategy where you buy a fixed amount of a particular investment at regular intervals, regardless of the asset's price. This means that you're buying more of the investment when the price is low and less when the price is high, which can help to reduce the impact of market volatility like a safety net. One of the main benefits of dollar cost averaging is that it can help you to avoid the emotional aspect of investing. When the price of an investment is rising, it can be tempting to buy in at the peak. But when the price is falling, it can be tempting to sell. However, by following a pre-planned investment strategy, you can avoid making impulsive decisions based on your emotions. Tip number 4, understand risk. Every investment carries some level of risk. Make sure your investment choices match your financial goals and your comfort with risk. It's important to assess your risk tolerance and invest accordingly. Don't invest in something you don't understand or take on more risk than you can handle. For example, if you're a risk-averse investor, you may prefer to stick to low-risk investments such as index funds or government bonds. On the other hand, if you're a more aggressive investor, you may be willing to invest in higher-risk investments such as individual stocks or cryptocurrencies in hopes of generating higher returns. Remember that all investments come with some level of risk, and there is no such thing as a risk-free investment. It's important to do your research and understand the risks involved before investing your money. Tip number 5, focus on the long term. Patience pays off. Stick to your investment strategy and avoid reacting to short-term market ups and downs. Long-term thinking is often the key to financial success. For example, let's say you invest $10,000 in a diversified portfolio of index funds. The value of your investment may fluctuate in the short term due to market volatility. However, if you stay focused on the long term and continue contributing to your investments, you can ride out any short-term fluctuations and potentially achieve significant growth over time. One way to stay focused on the long term is to set clear investment goals and regularly review your portfolio to ensure that it's on track to meet those goals. Additionally, consider working with a financial advisor who can provide guidance and support as you work towards your long-term financial objectives. So, there you have it. 5 essential investment tips to help you build wealth and secure your future. Remember to start early, diversify your portfolio, invest regularly, understand risk, and focus on the long term. If you like this video, check out our video on the best crypto exchanges in 2025. We'll see you next time. If you are down with the more in-depth vlog with respect to my website's investment advice page, please subscribe and turn on notifications. I really appreciate your support. So, thank you. Until then, take care and happy investing.